Kia ora, good morning. It's the start of week for some and just another Tuesday for others. I'm Hamish Wilkinson on a one-day stand-in for Mike. It's the 28th of January 2020 and this is Kiwibank's Markets in a Minute. Okay then, while the week shapes up as a pretty big one for financial markets with the US Federal Reserve and the Bank of England set to provide updates at their respective policy events, combining with a busy week of company earnings out of the US, including the likes of Apple, who is set to report tomorrow morning, the focus for investors remains squarely on the coronavirus outbreak. With Chinese officials making the decision to extend the Lunar New Year holiday period for an unspecified length of time in an effort to try and halt the spread of the virus, markets have also taken a defensive risk-off stance. The move to an effective lockdown mode is starting to see a financial impact being priced across global markets. With the Chinese Shanghai Composite now closed until next Monday and Hong Kong's Hang Seng shut at least until Wednesday for the extended holiday period, wider Asian, European and US equity markets have so far taken the brunt of the weekend's developments, seeing pretty much a sea of red across screens yesterday and again this morning. Elsewhere, the negative tone has also attributed to declines in oil prices and global bond yields, with the US 10-year now sitting at lows not seen since last October. If there was a place for investors to hide, that would be in either the Japanese yen or gold, both benefiting from the classic flight to safety trade. Closer to home, rewinding the clock back to cover off the last 48 hours or so of trading, Friday's stronger than expected domestic CPI release saw the New Zealand dollar initially holding ground versus the US dollar and stronger against most of its major currency crosses within the risk-off environment over the weekend. However, fast forward to Monday, and with Australia also out of action for the observance of its National Day holiday, the Kiwi couldn't keep up the trend-bucking mode, falling below 66 cents and then, perhaps more importantly, through a 65.80 multi-week support zone as Asian markets came online. Overnight, the declines have continued for the Kiwi, and it now sits around in the mid-65 cent area as of this morning. Okay, that's it for me. For those who enjoyed the holiday yesterday, enjoy the shortened week ahead. Ka kite.